prospect of company tax cuts in the budget certainly not being ruled out by senior sources in the government at the moment, despite previous attempts being stymied in the Senate. We know at the very least there will be some form of tax break for business in the budget as the government looks to create as many jobs as possible. It could come in the form of company tax cut. It could also come in the form of an investment allowance. This is what the Business Council of Australia is pushing for, a 20% tax break on investment in new projects in Australia. We know the coalition under Malcolm Turnbull tried for years to get company tax cuts up across the board, and the government ended up getting it through the Senate for companies with a turnover less than $50 million, but not everyone. Here is Treasurer Josh Frydenberg flagging another attempt at company tax in May.
As a government, we've always looked for opportunities to cut taxes. When it comes to company tax, I've said before, I think that the rate here in Australia is uncompetitive. We have cut SME company tax cuts, company tax rate legislated down to 25%, but you've also got larger companies that are paying a higher rate. We did announce in the first package an accelerated depreciation initiative, which would see businesses with a turnover up to $500 million be assisted with a 50% accelerated depreciation. That's an added benefit to some of those bigger companies. But at 30 cents in the dollar here in Australia for larger companies, 21 cents in the dollar in the United States, 19 cents in the dollar in the United Kingdom, and 17 cents in the dollar in Singapore, Australia has now the second highest company tax rate to Portugal in the OECD.
Seems pretty emphatic there. It's almost a surprise if it's not contained in the budget measures, but could it go through the Senate? So here's the lobby ask apart from that from the Business Council of Australia for this investment allowance. In its pre-budget submission it released a couple of weeks back, Business Council saying the effectiveness of an investment allowance or any tax incentive to encourage investment will be maximised if it applies to companies small and large, registering some discontent there that in quite a few policy measures, including JobKeeper, the government's done more for small and medium enterprise than big business. They say here large business represent less than 1% of all businesses, sure, but they account for some 80% of investment. Every dollar released through such a measure would have a multiplier effect through the economy when most needed, with the biggest gains coming from the larger projects. Preliminary analysis by EY, Ernst & Young, suggests a 20% investment allowance applied to all businesses could lift business investment around $200 billion and help create over 500,000 jobs over a decade. The measure could cost around $10 billion per annum. In its submission, the council talks about a mining company, say, investing $1 billion in a new mine, setting a 15% rate of return, pretty tight rate of return, they argue. Under the current system, the project would have a 14.8% rate of return. With the allowance, the rate of return would be 16.2%, enough to get the project up, they argue. And here is what we know about what is in the budget so far. So we've been able to glean some details. At least the first stage, or should it be called the second tranche of income tax cuts, which was announced in the last budget, which could see some Australians save up to $25.65 a year, to be brought forward from 2022, so probably to 2021. Be interesting to see if the third tranche, which gives Australians as much as another $8,000 a year, is brought forward from 2024 to 2023. Then there's the question mark around company tax cuts. We revealed yesterday JobKeeper will finish in March in the budget. As far as the budget's concerned, we know that there will be some sort of incentive for businesses to hire new employees, perhaps one or two payments as opposed to an ongoing wage subsidy like JobKeeper, and that this will be for small to medium-sized enterprises. And we know the 2021 deficit will be more than $200 billion, a record deficit, and we know there will be an increase in the infrastructure budget. How much remains to be seen. The government's current commitment, $100 billion over 10 years. To move the meter, you'd need a lot more than that, Kieran.